Good afternoon, everyone. So we are at the final session of the day. Not the final session, the final panel of the day. And I won't hold you guys for too long. We'll have an interesting discussion, and then, of course, we can go up to the cocktail reception. But I would quickly start off by introducing what the panel is all about and set some expectations. But before that, I would like to quickly introduce our panelists. We have Stephen Andrews sitting at the end of the row. He's with NewLight Africa. Then we have Erik Wurster, who's with UpEnergy. Then we have Katherine Lucey, who's with Solar Sisters. And of course, we have Gaurav Manchanda, who's with 1 Degree Solar. I'll give time for each of the panelists to quickly introduce their organizations as we are jumping into the questions. But just to set the tone for the discussion that we are going to have, one of the key elements of providing energy access across rural markets is specifically on the distribution model. So most energy companies try to work on a particular distribution model, and they try to pivot the model depending on what the market suitabilities are. So most of the organizations have at some point of time experimented with agent models or local entrepreneur models or networks. And the 4 companies that we have up on the stage with me have done that excellently over the last few years. So we will hear from their experiences. So I would like to quickly go up to Steve. If you could quickly introduce your organization, Steve.
Thanks, Shrey. Is this working? Okay. So up until 4 weeks ago, I was the chief executive of SolarAid and Sunny Money, based out of Nairobi. But I left partly to set up my own for-profit company, NewLight Africa. So I wouldn't say it's true that NewLight Africa's got years of experience in running agent networks, but I've certainly done a fair bit of that at SolarAid.
Okay. I would also love to set you I would love for you to set the stage and sort of ignite the discussion and tell us a bit about yours as a distribution company. So if you could just highlight why distribution is important in the space that we are talking about, and how exactly is your organization different from what you've been doing earlier?
Okay. So without distribution, you've just got a bunch of guys in dark rooms designing products, haven't you? I mean, there is nothing without distribution. And so, sorry, gals and guys. And so, yeah, as somebody in the last session said, product is king, but distribution is God. And actually, it's what I love. It's out in the rural areas, selling lights in front of customers, in front of agents. And at Sunny Money, I had the time of my life. I joined 3.5 years ago when Sunny Money was selling 200 lights a month. And then the last month I was there in July, the last full month, we sold 85,000 lights in the month. And we were on a run rate of about 70,000 a month. And to be honest, we hadn't even started. The possibilities to expand that model were huge. So distribution is what I love. I feel that there's plenty of fabulous technologies out there, all of which are struggling to get into the hands of customers. And so that's my place, to be selling other people's technology. And NewLight Africa is a response to the fact that I believe now this is a fully commercial market. And so it's a time for private enterprise now to come in. And it's time for some aggressive behavior and some scaled up companies to come in. I think that the distribution requires economies of scale and a lot of units to be sold. I feel confident that I know how to do that. And so I want to do what I've done most of my life, which is to run my own company and to get back doing that, but in this space.
Okay. And what is specifically different about NewLight Solar? When we talk about your experience at Sunny Money and what you had been doing over there, how do you sort of differentiate what NewLight Solar is going to do in the future?
Sunny Money built volume sales over a period. I mean, if you go, the market is changing so fast, it's crazy. And so when when I first started with Sunny Money, we tried the agent model and we really struggled. There just wasn't the understanding and the demand in the market to keep agents busy and making a living. So we would often have really inspirational people who wanted to sell solar lights, but they would struggle because there just wasn't the market demand there. So at the time, Sunny Money, we thought, okay, we therefore need to do something to create a catalytic moment within markets to sort of increase the understanding and the demand. And we developed a methodology of selling through schools where we would harness head teacher networks to do schools-based promotions of study lights. And it worked. It really worked. And then what was interesting was that just the very nature of those promotions where you could sell a lot of lights into communities really quickly meant that you would get this catalyst where suddenly you'd get a tipping point. People would start to get the technology. They would want more lights, different lights, bigger lights. They would want us to be there 365 days a year. Problem with schools campaigns is that you're operational during the term time, and then your business collapses in the holiday time. But customers were saying, we want you here 365 days a year, and we want a range of lights. So we started introducing agent networks at sort of only 9 months or so to sort of layer on top of the schools campaigns, and the results have been staggering. So for me, in the new company, I don't think we need to do schools campaigns. I think that the market's moved beyond that now, and that it's all about setting up an agents network. But one other quick thing I'll mention, and then you could decide if you want to discuss it in more detail later, is that there's a new technology coming into this market, which I think is going to break this market wide open. And that is, there's a lot of excitement and there's a lot of talk about pay-as-you-go, but it tends to be sort of at the $10 a month sort of range and selling products that are maybe in the sort of $200 plus, and you pay over 2 years. But at Sunny Money, we asked the solar sector to make us a pay-as-you-go entry-level light. We wanted a $10 light that you could sell for, say, $12, but installments of $1 a week, and then it's paid off. And the industry responded. There's a couple of companies that have made such a product, and early trials within SolarAid were staggering. You have pretty much removed any barrier that any customer might have to buying a light. You're now selling a light off in just 12 weeks for less than the cost of the kerosene they were buying, and so the barriers to purchase have come right down. And for me, this is the breakthrough technology, which is at the heart of my plans.
Okay, great. From there, we move on to Gaurav. So Gaurav, why a product and distribution company? So you're working in 3 countries, and we just heard Steve basically talk about how distribution is important, and that in itself is a huge market right there. So when you decided to start your company and operate in 3 different parts of Africa, you also started working with an agent model initially. And now you're pivoting to a slightly different model that we discussed. You want to go larger scales, and at scale, you're thinking of having a distribution network, which basically is in place. Could you tell us a bit more about it?
Sure. Is this on? Yeah. So I guess for full context, we started a couple of years ago, about 3.5 years ago, with a focus on lighting and phone charging for healthcare applications. So how do we power remote off-grid clinics and allow nurses and midwives to do their jobs after dark and call ambulances and whatnot in more urban areas. We had a couple difficulties with procurement cycles and whatnot from some of the larger multilaterals and organizations in the space. And at this time, we were also getting very positive feedback from nurses and midwives, clinic managers, et cetera, about the products that we were offering, saying that while the health indicators are certainly there, they're also getting a lot of very positive feedback from their neighbors because they were using it not only in the clinic but at home. And once it was visible at home after dark, and this was in Liberia, which essentially has zero grid access, where we started, they were the only families in these villages that had any lighting at all, as well as the Chinese flashlights that were in the market as well. But we got a lot of feedback from these nurses saying, where does my friend, the school teacher, buy it? Where does the entrepreneur down the street buy this? And at that point, we said, kind of, why are we hitting our heads against the wall and selling to large organizations that might take a year to procure 1,000 lights when we can sell it to a distributor down the road and do 5,000 in a month, for example. So it was never our, so to segue into your question, it was never our intention to stick with the agent model. So I wouldn't say it was a pivot necessarily for us, but we had to start with our proof of concept by proving the demand. So we chose to start in Kenya. We were taking private investment capital at the time, and decided, so Liberia was essentially a completely untapped market at this time, and Kenya, as we know, is one of the hubs, or probably the hub for solar lighting in Africa. And when we were taking private capital, we wanted to make sure the product was also very competitive in a competitive market, so we wouldn't get knocked out in a few months' time. So things went quite well. So from the launch of sales in Q4 2012 until maybe 6 months ago, we did have our own small, modest but successful, 1degree branded sales force based in different parts of Kenya. So we only started recently in South Sudan and Uganda. So we only had our sales force within Kenya. They did quite well. We were selling to some banks, mostly tea farms, flower farms, groups that would buy in bulk and then essentially utilize a payroll deduction system that was mentioned earlier. So that worked quite well for us, and the demand was there. We had some nice press as well, some nice lighthouse customers, including Fortune 100s, and I think all of the success that we had in the proof of concept has now led us to be approached, fortunately, and very fortunately for us in the last maybe 3 to 6 months, we've been approached by a number of very large distributors that have the networks that we had always hoped to tap into. So I can announce today, I actually got clearance earlier today, but please not for the Twitter space, but we have signed perhaps one of the largest solar distributors in East Africa that did about 200,000 units for one of the larger players in this space in the last fiscal year, and is now working with us. We do have, I'll keep in mind that we do have much larger systems. So we have, you mentioned the product fit. Our recommended retail price is about $100 US as opposed to $10 or $12 or $40. So our volumes are lower, but it's, I think, being responded to quite positively from the resellers and distributors because the margins are really there. And the further out you go, the more it costs you to get there. And the smaller your gross margins are, or your net margins are. So since we've been approached by these larger distributors, they're focusing more on what they call modern trade. So how do we get into the Walmart, the Target equivalent of Kenya or South Sudan or Uganda, where a lot of people in these urban areas will buy gifts for their families in the rural areas, or even this really, I think, not missing middle, but this overlooked peri-urban consumer that is kind of under our noses all the time as we're driving to the last mile. But they're, as mentioned earlier, they have grid connections, but they don't actually have electricity, right? And they're spending a lot more money for that 40% solution that's on grid, and they're willing to pay quite a bit more without all the financing schemes, et cetera. So I guess to summarize all of that, we started out by going to tea farmers, flower farmers, et cetera, that were rural, extremely low income, less than $1,500 a year typically, and now we're looking at a consumer class that's really emerging quite dramatically in Africa, which is what we're calling the emerging consumer. So about $5,000 to $7,000 a year, still not rolling in cash, but they have enough money for 1 or 2 smartphones in the family. They might have money for a 12-volt television. They're paying more. It's proven that they're paying more for data plans, for smarter phones, and that's a much. They're much more power hungry, essentially. So I guess I'll stop and just say that we're looking at peri-urban and rural, and have kind of moved away from the direct sales model, and are now essentially providing a full suite of services, access to our ERP or our CRM for our distributors, as well as all the trainings that we mentioned earlier. So we're essentially providing a business in a box for these very large distributors that then have their own networks.
So if you have to step into a new market, we were talking about this today morning. Say, for example, India or Bangladesh, we heard about these two countries and huge potential markets for you. So would you, again, look for a distributor network when you're piloting your project in, say, India for that matter? Or would you, again, go back to the agent model and test out the market a little bit before you?
The former. So I think we've learned a whole lot, and we wouldn't be as impressive to these distribution partners if we hadn't gone through all of the pain of the last 2 years and all the lessons learned or opportunities for improvement, whatever you want to call it. We have a lot of insight that we can provide and actually market and sell to these distributors. So it's very different talking to, my gods are here on the stage with me, but it's very different talking to, in South Sudan or Uganda, for example, it's a Caterpillar distributor, right? So they sell diesel gensets, and they're where people go for power in these countries, because solar, it's still an untapped market for solar, and they have no idea how to sell solar lights. So, it's very different for me to give a product to Katherine as it is for a diesel generator distributor in these other markets. So, I think we would utilize what we've learned and develop that strategy together, because there are a number of, as this is becoming a more proven sector, there are white papers and reports coming out from not only McKinsey and Lighting Africa and IFC, but Standard Chartered and Barclays and whatnot, and GOGLA and all these other associations that are out there, and of course ARC Finance, and having one place for all of for these distributors to look, meaning us, really helps them have the peace of mind that they need to then place larger orders. So I think we go for the former and use their networks. We've gone through it once, so not that it's one size fits all at all, but we're not grant funded and we're not grant supported. I mentioned we started about 4 years ago and we got our first grant about 3 months ago. So we don't have the tolerance to kind of test in every market where we go.
Great. So Katherine, Solar Sister, everyone knows about Solar Sister. It's got this very unique example of entrepreneurship development while at the same time women's empowerment, right? So could you tell us a bit about your organization and how exactly do you go about creating the market and the distribution network also, the agent model that you have?
Sure. So Solar Sister was founded really to solve 2 gaps that we saw in the distribution. One is that last mile of distribution, which I think a lot of us are trying to address, and making sure that the products get out to the people that it most will impact, whose lives will be changed by having access to light and energy. And then when we looked at that and we saw with the advent of product-sized solar that came about a few years ago, what had been a philanthropic endeavor of getting solar out to people, all of a sudden a market opportunity opened up where you could use the power of the market to really distribute solar, because the product was now priced at a price point that people could pay for it. And when you look at how much the solar cost versus how much they were spending on the alternative of kerosene, the economics is just incredibly compelling. And people understand it. The buyers understand, I can buy this $10 or $20 lamp and it's going to save me $100 over the course of a year of kerosene. And so, opening up that market, and then the question became, if you're going to do a market-based solution, who's your customer? And that's where Solar Sister looked at, or this is before we were Solar Sister, but that's when it looked at the household level, it's really women who manage the energy. They're managing the utilities. If you think of water, heat, and light as your basic utilities, it's women who are on a day-to-day basis making the purchase decision of, am I going to go buy a liter of kerosene or 2 liters of kerosene today? Am I going to walk 2 miles or 4 miles to collect wood? Am I going to get the dirty water nearby or walk further for the clean water? And so we figured if that's our customer and we want to use a market-based system, we need demand and we need our customer to demand the product, which means education in addition to, so we needed to create market awareness in the sense of that people and specifically the women in the household, understand that these products are available and this technology is available, and they feel comfortable making that choice. And we're talking about a pretty big risk of if you've been lighting your home with kerosene for not only your lifetime, but for generations, and now you're going to make a different choice of investing some upfront money in something like solar, you have to have a lot of confidence, and that's going to happen only if you really trust the source. And that's really what led to Solar Sister, which was we figured the best way to bring a new technology solution across the threshold into the household was one woman selling it to another. And that's where we came up with this woman network of distribution. So it was really a business decision that we figured we could reach our customer the best through a women's-based network. And then the second benefit of Solar Sister, which is that it's women's economic empowerment, was kind of a nice, it was kind of the icing, it was the add-on. And it's really, to us, it's really, sort of a circular, one thing leads to the other. Are we selling solar to empower women, or are we empowering women to sell solar? And it just kind of, goes in this loop like this. I think I agree very much that this market, over the few years that we've been in it, has changed tremendously. It's so fast-paced. The products are improving. The price comes down on the technology. There are so many more players in the market now than there were just a few years ago. People are reaching out to the markets in a way that they weren't a few years ago. A lot more options for our customers to have. And so I think all the time about, are we still a valid, distribution model? Do we still need what is kind of this borderline, we're a social business, so we're driven by impact, and we hope to at least break even. Is there still need for a Solar Sister in the market, or have we gotten to the point now where it is a pure commercial market? And I think there is a commercial tranche up here at the top, and I think right below that there is still a tranche that needs support. And if you look at it from a gender lens, I think what you'll find, and what we find quite frequently, is up here at the top where it's very commercial, is you have people who have become educated about the products and are excited about them and will pay for them and will find the financing for them. And that tends to be people who have access to income in some form or fashion and access to mobility so they can get to where the products are. Right below that, you'll see a huge market of people who still need the products and could pay for the products, but there's still an awareness building that needs to happen, and there's still a transportation, last mile distribution that needs to happen. And if you were to look at that through a gender lens, I think you would find very easily the top tranche tends to be a male-dominated customer, and that next tranche down is going to be a female-dominated customer. And so we still feel that it's very much still important to build out this market so that everyone has access to energy, and that we are getting to that last mile household. I think of, we're all talking about getting to the last mile, and Solar Sister will go to the extra mile, one more mile beyond that, so that everybody gets access.
Great. Erik, so UpEnergy, you started as a company that basically was promoting cookstoves and cooking solutions, but you linked it with the carbon market. We heard on the last panel that there were companies which started with this model, but then they had to shift the focus. Could you tell us a bit about UpEnergy, how you started, and why did you start with the initial model that you have? And how have you adapted right now, given that the carbon markets are at a low? How have you adapted the business model that you have?
Right. Yeah, thank you for the opportunity to address that and to chat with you about UpEnergy. So we founded UpEnergy, myself and several co-founders, in 2011, and as Sri, you mentioned, that was sort of, I'd say, the tail end of the heyday of the carbon markets. We came, all of us, from a carbon finance background and a cookstove background. We really felt like distribution was sort of the key centerpiece of this, of the entire equation, the key missing link. For all of the reasons you mentioned, Stephen, absolutely. But also from a carbon finance perspective, being in touch with your customer is actually really important. Understanding where your customers are and their usage patterns is really critical to making all of that work. And distribution allows you to do that. And so we founded UpEnergy with all of that in mind, with the intent to sell a host of clean energy, household energy technologies, but ended up really focusing on cook stoves. So since 2011, we've sold about 30,000 products, of which something like 28,500 are cook stoves. And the balance is solar lanterns and some water filtration systems. We sell mostly other manufacturers' products. We have partnerships with a variety of different manufacturers. Have also recently brought our own product to market. I put that in quotes because it's also manufactured by someone else, but it carries our brand. Globally, we're branded UpEnergy. In Uganda, where we work, our sort of consumer brand is Smart Home. So that's a Smart Home branded, manufactured in Uganda, charcoal stove, efficient charcoal stove. And as I'm sure you all know, the carbon markets have gone through a significant decline over the last 3 years. It's important to note, in our circumstance, we're a little bit unique in the sense that we have a series of long-term purchase contracts at fixed prices that really insulate us from, to some extent, from what's happening in the carbon markets, and they extend through past 2020. So they give us a long horizon to be able to think about what the best direction is to go. That said, I mean, it's very clear that building a business completely relying on carbon simply is not good business. And we have, I'd say since early 2012 to mid 2012, been developing with that in mind. So selling stoves for what it costs to manufacture and distribute them plus a margin. You know, obvious things that you know, one should do in a market-based system. And we continue to, you know, increase scale and increase our distribution channel with the idea that over time we're going to be less and less reliant on carbon and more reliant on sales revenues. Right now we're, I'd say since our founding in 2011, we have revenues of over $1 million, and about 60% of that is carbon and 40% are sales revenues. So it gives you a sense of sort of where we stand right now, but that transition is ongoing as we speak, and our margins sort of vary by product. I'm sure many of you know in this room that the cook stove industry is a tough business. It's a small margin, high volume business that's very competitive and sort of riddled with market distortions from carbon. And you have very price sensitive customers. So we've found that that actually going down a notch in terms of the price of our product increases our chances of being able to get a healthy margin from the product rather than selling more expensive products. But we have a full range of products that we sell, and each of them offers, you know, sort of unique value to the customer depending on the product. So maybe I'll pause there, and I know we'll go more deeply into various topics soon.
Right. So Steve, I mean, this question is for you because you have set up a new company. But being a distribution company only, so the message is actually a bit difficult to get across to investors and other philanthropists to support you, given that it's very different from being a product company. So how do you take a NewLight Africa and pitch it to investors to support you initially?
Shrey, I don't think it's that difficult. I think that investors understand that product is just kit if you haven't got a way to sell it. So I'm not finding any difficulty in pitching that. In fact, you know, there's 600 million people in Africa that are currently using kerosene or candles, and I don't believe there'll be any in. You can choose your time frame, 15 years or 10 years. I don't think there'll be any. So the question is, who's going to sell those products to those 600 million people? That's the market opportunity. And are they going to, and for me, there's just such a massive need. And it is not just for companies to sell stuff. It's for companies to look after customers. You know, if you or I go into a shop here in New York and buy a phone, we know what phones are good. We know that if the phone doesn't work, where we can go back and fulfill on a warranty. We know we've got consumer law on our side. It's just easy for us. And yet the customers that have the most to lose by buying a poor product have none of that. So I realize I'm now not answering your question, but this is what excites me. I believe that we have a huge opportunity to create that brand, a product-neutral brand that customers can trust to sell them good products, to look after them if the product goes wrong, to look after them if they're not understanding how to use it. It's the sort of stuff that we take for granted. It's what will exist in Africa in 10 years' time, and I think we're in a really great place to create that.
Yeah, I think that's great. And could you also just walk us through the process of identifying an agent? I mean, how long do you have to work with an agent before he goes out into the market and starts selling the product? What's the process like? Could you just walk us through that?
So what I think you would need to have done a few years ago is completely different today. I'm both at Sunny Money and now at NewLight Africa. I didn't have any other objective than to sell lights. And so for me, I always rejected the idea that we would try and turn people into entrepreneurs. I'm just not interested in that. I'm interested in finding people that are born to sell, who have already proven that they are entrepreneurs, and to get them selling solar lights. And actually, that's really easy to find those people, because they're the ones that are already running shops. They've risen above their community out of very difficult circumstances. They are inherently entrepreneurial. They have safe premises. They have customers. They have access to some capital. Those are your agents. I don't see why you would try and pluck people off the streets and turn them into business people when those people are there. But then the next stage of the challenge, which actually happens naturally, is for those agents, which I would call like a master agent, to then get other people on foot and bicycle acting as a sub-agent and pushing out from the shops into their local communities. Those are not people that have access to capital, but they are people prepared to go into communities and sell lights for a fairly thin margin, which they're going to have to share with the master agent. So for me, the trick is how you find the master agent. And if I may just say one more point, I think most people agree Kenya's ahead of the rest of the continent in terms of the maturity of the market. And most of us that have worked in Kenya will tell you that if the most densely kind of targeted area in Kenya is the west towards Lake Victoria around Kisumu area. Well, you go and walk in the towns around Kisumu and you try and find evidence of people selling solar lights, and you just won't find it. You will see some M-Copa shops, but you can walk for hours and not see any evidence of people selling solar lights. So those that are doing it under the radar. There's none of the marketing, there's none of the consumer marketing that you would take for granted in a Western market. So there is a real huge opportunity to ramp up and significantly invest in consumer marketing and then drive them to the shops, to the agents, to execute the sale.
I have the same question for both you, Katherine and Erik. We'll start with you, Katherine, specifically because you have all women's workforce working for you. How different is it? How difficult is it? Are the two questions that I also have for you, given that we have seen similar examples in India, but they haven't scaled. They have, so we have had corporates like Unilever trying out the Shakti Amma model in India, but that essentially acted as a showcase and it stopped there. It could not scale. And a huge corporate basically could not get that machinery to work, and then they couldn't basically get it to survive. So in your example, how do you go about identifying your entrepreneurs, and how do they sustain themselves over a period?
Well, it might be the difference in, Solar Sister is not a showcase for somebody. This is our business. This is what we do. This is, through and through who we are. And so, success is really, not an option. We have to, this is what we do. So the way we find women entrepreneurs is a mix of, what we're doing is we're offering an opportunity to become a businesswoman, an opportunity to become an entrepreneur. And it's not going out and approaching a group and saying, we're going to turn every one of you into an entrepreneur and we're going to shove it down your throat. And it's not finding women who are already successful entrepreneurs, because there simply aren't enough of them. So what we do is somewhere in the middle, where we're looking for women who are responding to the opportunity and have the qualities that we look for, that we see will make them successful entrepreneurs. And that's a certain level of initiative, of grit, of strength of character, and knowing who they are. And when we see this particular mix, and they reach out for it. So we make the opportunity available, but they have to kind of reach out for it and take it. They have to apply to become an entrepreneur. They pass a certain level of a few bumps in the road that if they're not really interested, or they think they're going to get something out of it that's not what we're offering, they're going to find their way off the ramp. What we find is, by reaching out to women who are the reason that we find them to be so successful as entrepreneurs, is typically they are already genius in their own markets. They already know how their markets work and how their neighborhood works and how their community works. And they already have very, very deep networks in those communities. And so by tapping into their natural social networks, it starts with their immediate family, then their broader family, their church group, their women's group. It's a tremendous natural network that they bring to the work. Then we're able to support them by providing them with the training on the technology, training on business, and training, and then further support as we go along. And then you put those two things together and you have a very good business opportunity.
Great. And Erik?
Yeah, it's interesting to hear the various answers to this question. And I think it may depend a little bit by product. Because cook stoves are, as I said, they're hard to sell. And so while we do have an extensive network of retailers, we also find that in a retail shop, your product is competing with all the other products in the store, and that cook stoves require often for you to actually go out and go door to door and make the sale. And so a certain amount of direct sales agent recruitment is required, I think, for that reason. We go through almost like a self-selection process, where we will recruit sales agents. We call them micro-entrepreneurs, and we offer them sort of a package of incentives and margins, and the value proposition is pretty clear to them, that they would make money if they succeeded at this. But there's a series of hurdles that they have to get over to get there. To participate in the initial training, they actually have to put down some money, a relatively small amount of money, but to demonstrate that they're serious about it. They go through the training, and then they spend a week shadowing one of our direct sales people who have been with us for a long time. And after that, frankly, 9 out of 10 of them might not come back. But the one that stays often turns out to be a pretty serious sales agent. And so it's just a matter of them selecting themselves if they want to continue. And we've been building our roster sort of organically that way. And that's worked quite well for us.
Mm-hmm. And Gaurav, you're a bit different right now, given your business model at this point of time. So could you tell us a bit about how you go about establishing your proprietorship sort of sales model, and how exactly do you identify partners? I would love for you to sort of speak a little bit about the Coca-Cola partnership that you initiated.
Sure. So I guess that's 2 questions. On the partnership side, I mentioned that we are working with a number of larger distribution companies, most of them have their own retail stores or their own proprietary networks, either through large supermarkets, their own branded retail locations, gas stations, even propane refill stations as well. I think I can speak about how they select their staff a bit more easily, since we're not doing that anymore. But for example, the partner that we've recently signed, they're headquartered in Mombasa, not in Western, but on the other coast of Kenya. And they've had, I believe they have about 15 or 20 sales staff right now, all of whom were born and raised in Mombasa. I think the newest staff has been there, the most recent hire was 7 years ago. Many of them are there for 10 or 15 plus years, and the process has been done. Right? The trustworthiness, the opportunities to leave the ramp have already been there for them, and they've been pre-vetted essentially by this partner. So we don't ask too many questions. I think the trust is very clear, and we do offer trainings, and we do provide trainings for their sales agents, with regards to sales scripts, technical manuals, marketing materials, et cetera. That has all been mentioned before. With respect to Coca-Cola, I think that's maybe another example of identifying agents. And I know a number of companies that will look at either the large banks, Equity Bank, for example, as we mentioned earlier today, and looking at, or there are ways to utilize these larger banks to find out who their entrepreneurs are, or who fits your profile, right? Because they've already done the credit worthiness analysis for you and can tell you which one of their borrowers or which one of their accounts is worthy of a $40 loan, for example, or a $200 loan for small-scale wholesale, for example. With Coca-Cola, so I think that's been a very good lighthouse customer for us. We've also done just over $1 million of revenue in the last year and change, and I would say Coke is just, I would say less than 10% of our overall sales, so they're not our bread and butter in terms of revenue or sustainability, but the way we approached them was a pure business case. So, and again, this was a project that we initiated within peri-urban and urban Nairobi. So we were not in Nyanza, we were not in Western Province of Kenya, or in the village. These were shops that are outside of the Walmart equivalent, or outside of the big shopping malls, and they're completely off-grid. They're next to 10 other shops that are also off-grid, and they happen to be painted in Coca-Cola red with the Coca-Cola logo on it. Now that these shops, so the way that we presented the concept to Coke was not, dear Coke, please sell our products through your channel, but you have a missing opportunity. You're missing an opportunity here to sell more product and to increase your brand value. So, we have a multi-light system, as I mentioned earlier, so it's a bit larger, more expensive, but these kiosk owners who are pre-selected by Coke have their own bank accounts at banks that we have partnerships with as well. But they're already in the Coke network and are now using one light inside for operating their shop, and then one light outside, which is essentially powering or bringing in customers to the shop. So we've proven with third-party Nielsen market research for that project that foot traffic went up dramatically, operating hours went up by 4 hours a day on average, operating expenses went down 90% because they were spending money on kerosene or candles for solely for the interior light. So essentially, think about 500 years ago or 300 years ago or 200 years ago in the US, when all you could see was the window to the restaurant and then a small candle inside. That's all you could really see on these, again, urban streets in high-income areas where most of us stay and live. And what we're finding now is with the OpEx reduction, the operating hour improvement, and an increase in revenue of about 15% or $130 a month, which has all been, again, proven by third-party research. Coke said, this is great, let's roll this out to thousands of kiosks, and at this point, it is humming along nicely. We did have to do a lot of pushing for that, but at this point, there are champions or brand ambassadors for us within Coca-Cola and within their bottling partners that are doing workshops and trainings for kiosk owners and also for Coke employees. And the sales are going quite well. They're getting their own press. We did have to do some co-branding with them, which is a good exposure for us as well. And now we're at the point, now that these kiosk owners are using the product, now they're calling us because during blackouts in these wealthier areas especially, they're the only location with lighting on the entire street. So people are now asking them, how did you get steam or electricity in your small shop? You have it's a 3 cubic meter location and you're the only one with lighting after dark. And now we're getting the phone calls saying, how do we resell this? How do we buy this in bulk and sell it through our location? But if we had approached that, if we had said that initially to Coke, we wouldn't have gotten a call back.
Right. Could you also tell us a little bit about what's the split between the agents that you have in your network right now and the overall sales that you get through the proprietorship network? And what kind of numbers are we talking about?
Sure. So historically, currently we have no agents. As of 2 months ago, our agents had been absolved or absorbed by our distribution partners and have been hired by them. They're fully trained. They're vetted by us, and it was a pretty small force, so they were able to be easily taken under the wing of our distribution partners. But historically, until that time happened, all of our sales were through agents. There was somebody mentioned Boma Safi earlier, but our own proprietary network or networks of other of independent entrepreneurs as well were buying. And our agents were mostly they were not doing direct-to-consumer or retail sales. They were getting small mom-and-pop kiosks or mom-and-pop shops on board to buy the systems. So we were essentially using our network for wholesale. And I would say easily 80% of our sales were through our own network. So we had with 10% being Coca-Cola, 80% ourselves, and another 10% being, opportunistic random sales that came to our door.
Okay. Same question, Katherine. So how many agents do you have in your network at this point of time? And over the next 3 years, how do you sort of see that expanding? And what kind of numbers are we talking about here?
So Solar Sister, right now we have nearly 1,000 agents. We're in Uganda, Tanzania, and Nigeria. We've been in the Uganda the longest, so there's probably about 500 agents in Uganda. We hope to see that expand very rapidly, both within those countries. There's still tremendous opportunity. We're not reaching as deeply as we want to in those countries at all. We haven't really penetrated. It's a huge market, and there's a lot of last miles out there. So we've got a lot of room to grow, and we hope to expand into other countries as well. Right now, we're focused where we are because you got to kind of, perfect what you're doing, or at least get it really solid before you expand further.
And again, so when we are talking about a distribution company, again, after-sales service becomes important because you have multiple products that you are working with. So how does that work out? Who trains the agents that you have? Are they the service network that you have, or do you have a separate service network provided by the company?
Yeah, so our agents are our service network. What we find with the solar is about 80% of the product that comes back to us for service is actually not anything wrong with the product. It's really just that the customer, bought the product, was really excited about it, used it for 2 days running, and then said, oh my gosh, it doesn't work anymore. So they bring it back, and we have to actually do customer trainings about warranty because it's not the habit, and people don't really believe that there is a warranty, even if you tell them. And so there's customer outreach, even after we sell the product. Our agent calls up and makes sure that the customer recognizes that there's a warranty. How's everything going? Is your product working well? And sometimes, hopefully, everything's going great, but sometimes they hear no, and that's exactly, I used it for 2 days and it doesn't work anymore. And it's like, okay, we'll come back in, let's see what's going on. And so the first line is just to make sure that the customer has the education to use the product well and to keep it charged up and know how to do that. And then of the other, if there is actually a problem with the product, we only deal with product right now that has warranties on it. Most of the warranties at this point are replace warranties. And so we will replace it immediately, and then we manage the process of, sort of back end of getting it replaced. But that way the customer has an immediate replacement. There's no time gap between it, and that helps them. I mean, it's a tremendous marketing tool for us, because what we find is the customers are so excited that a product that they bought that broke or that wasn't working well was immediately replaced with one that was. That word of mouth spreads and builds up that trust in the marketplace, which is really the key to this market developing. And so it depends for us on making sure all of our agents are well trained, and then also that we have great relationships with our suppliers, because we are turning around and saying, okay, you've warrantied this product, here's a case that showed up that for whatever reason, wasn't working well, and we're shipping it back to you. And over the few years that we've been in this, we've seen, some better and some worse responses from the suppliers, and I think the ones who are better, people like Greenlight Planet, who stand behind their product, are ones that we continue to work with, and then the ones that have not been as good on the warranty side or on the service side to us, we phase out, and we're not going to represent them.
Erik, same question. So how many agents do you have in the network? How do you see yourself scaling up over the next 3 years, and what kind of product volumes are we talking about here?
Sure. So actually, before I answer that, it's worth giving a broader landscape of how our distribution channels work. So in Uganda, we actually have three quote-unquote separate channels. We have our direct sales team. We have our retail network / micro-entrepreneurs, and agents would fall in that. And then we have institutional sales. So the first, direct sales team, is actually less about scale and more about understanding our market, understanding our customers, and understanding our product, and then transferring those learnings into these other more scalable channels. The retail network and micro-entrepreneurs and institutional sales, which institutional sales could be anything from a tea plantation where we're selling to farmers in the tea plantation, and we have an arrangement with the management to offer some consumer finance to corporations or NGOs that have a community presence, for example. Here we're talking about sales agents, the second channel that I described. We currently have about 18 agents, so not a huge part of our volume right now. We're looking at growing that over the next 3 years, probably to something like 80. So that gives you a sense of sort of the total role it plays within our distribution channel. It's important, but it's not yet pivotal. And was I also to touch on warranties?
Yes, after-sales service and warranties.
After-sales service, yeah. Similar to Solar Sisters, we essentially pass on the warranty from our suppliers, and that's worked very well. We've actually had a very low failure rate, and in cases where that's occurred, our manufacturers have been very good about making good on that. We handle it locally, and then we simply stock it in our warehouse, and it's credited to the next container, and it's actually very straightforward. Also similar to Solar Sisters, cook stoves in general require a lot of training, how to use them properly. We follow up with our customers, how is it going, and there's often questions about, the most common question is, the hole in the stove is not big enough for the pieces of wood that I'm trying to put in. That's sort of very typical. Efficient wood stoves, by their very nature, use narrow, small pieces of wood, and if you've been cooking with a 3-stone fire for 4 generations, you try to put big logs in, and that just always happens. So there's always that discussion and similar discussions that take place. But by and large, I think customer satisfaction is very high, and certainly the customers appreciate us following up, and it's often needed.
So Stephen, one last question for you before we open it to the audience. So given that NewLight Africa is a new company that you're setting up, your agents essentially are going to be the ambassadors of the company. So how do you train them in a way that they're coherent with your sales strategy and also the vision? It's essentially the NewLight brand that's going to go out into the market. So how do you plan for that?
They're not the ambassadors for the company, they really are the company. And so for us, it's about setting up a system, you know, a sales team that spends all their time in the field talking to shopkeepers, potential agents, about setting up systems that allow people to fail, and so that we can just, you know, the cream will always rise to the top, and you work with the ones that prove that they can sell lights. And so for me, one of the tricks that I learned through Sunny Money is just don't invest lots of money in potential agents until they've proven that they can sell lights, and then invest lots of money and say, okay, you know, let the winners reveal themselves, and then invest in training and branding and support for them.
Great. So we will now take questions from the panel. Are there any from the audience? Are there any questions?
Well,
Chika?
if I can just add in a bit on the
Sure.
after-sales side. I think a few of us have mentioned trainings for these agents and having them be the first line. Just a few things that I wanted to throw out to the crowd, since I think there are other manufacturers here and others that have products in their networks. We do have a partnership with a group called Chloride Exide in Kenya, which is a big battery manufacturer and distributor. They actually pay us for each dead battery that we return to them, so there is an end-of-life part of the process, and we monetize on that, fortunately. I think that's open to any distributor distributor or manufacturer that uses lead-acid batteries, which are much more available in Africa, but also not as long-lasting as lithium-ion. That's one option I want to throw out. One thing that we've seen work well is providing access. We have a free short code in Kenya. So just like if you're watching American Idol in the US, please text your favorite to XYZ. We have our own short code that we grant access for our distributors. So essentially any of our distributors can use the same number. Vast majority of the incoming messages for customer support are actually testing to see if we'll call them back. They're very happy with the product and just want to see if they'll get a call back. And our service agents love that because it's the easiest part of the job. But that's worked quite well. That's part of the service offering I was mentioning earlier, because it makes it much easier for these new distributors to maintain direct contact with their end users, which is otherwise non-existent. And I think overall, I mean, Steve was mentioning pay-as-you-go and you know, kind of the evolution of the market, and this is, I think, partly why you know, we all collectively have to offer these services, because the consumer is now, well, first of all, because we should, but second of all, we really have to, and we stand apart from the generic Chinese manufacturer because the consumer is more educated. There's a wider product offering, and the difference between our $100 product or your $10 product and the Chinese version that's $50 or 50% of the cost is all of the service offering. And unless we can actually do a good job with that service offering, then we're going to be suffering with these low quality lamps in the market forever.